Ladies and gentlemen, welcome to Woodburn Accountants and Advisors webinar series on developing effective e-commerce sales strategies in China. You have joined us for day 5 of our webinar series on developing the effective e-commerce sales strategies. We have had a great 4 days thus far learning about how to create your business model, how to effectively communicate with your audience in China, and the legal implications of setting up an e-commerce model and working with partners locally in China. Today, we're going to look at the actual trade flow and what options exist for you, including the tax implications, Forex, and customs clearance. And we will end today's webinar with tips on developing a strategy as an overseas retailer. Before we begin today's session, however, there's always a few administration slides. The use of a VPN may be required for those of you that are based in mainland China. As is usual with any form of program on the internet, it could be that there are some technical difficulties and some internet instability and some sound issues. If you are running into any issues, please don't exit from the system. It usually takes about 30 seconds to 1 minute for the system to refresh itself. If you are having issues with your computer audio, then know that you have the option of also switching to a landline. If you want to switch to a landline, you just have to go to the audio section of the control panel, click on telephone, and you will then receive a dial-in number, access code, and audio PIN. As is usual with these types of webinars, we aim to achieve a 10 to 15 minute Q&A. Today, again, as I did on Monday, I'm going to be going through quite a lot of information, so we may not hit the Q&A, but I'll do my very best to achieve that. If I'm unable to answer your questions today, don't fret, I'm going to be answering them separately in private emails after the session is completed. But as I mentioned, please do take this opportunity to add your questions and add your comments. So let me just test the system. If you would all be so kind as clicking on the hand button in the control panel, great, that will allow me to know that you're listening in and you can hear me. If you re-click on the hand button, then it will disappear from your control panel. It's always lovely to see people returning to our webinar series, but for those of you that were unable to join and have never joined one of our webinar series, just allow me to introduce ourselves briefly to you. Woodburn Accountants and Advisors is specialized in inbound investment into China and Hong Kong. We basically establish, manage, and administer companies in both of these jurisdictions to meet each of our clients' requirements and specifications. Our services start all the way from the pre-investment stage in terms of pre-investment advisory on market entry. We also look at cross-border investment, tax optimization, restructurings, but we then implement the actual structures we advise clients on in terms of implementing companies, and then with all the ongoing services, administrative and corporate compliance services like accounting, tax, and payroll. Basically, all the stuff that most people don't enjoy doing. Our clients are from all over the world. They're all international companies that are looking to step now into the Asian market, specifically into Hong Kong and China. All of them are doing very different things, from manufacturing in China, sourcing in China, and obviously selling into China, whether it's goods or services. There are an extremely wide variety of attendees in all of my webinars. So just a minor disclaimer is the fact that this presentation is a general view for anyone that is looking to sell product through the e-commerce channels into China. If you do have specific questions or needs, please don't hesitate to contact me. I'd be happy to discuss what your questions might be. Just a little bit about myself. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I've been in this profession since 2003 when I relocated to Shanghai. I've been specifically focused on the corporate services world in China and Hong Kong for over 15 years now. I've learned a lot of things about doing business in China as a Westerner, ranging from everything from knowing that there's going to be an obstacle that comes in my path, let alone in my client's paths, all the way to knowing I have to pay attention to detail, especially in terms of the paperwork that's involved in doing business in China. And last but not least, I've learned a lot about being patient in the Chinese market. There's a lot of things you're going to learn about doing business in China, but the aim of these webinar series is really to educate you and hopefully eliminate the fear that a lot of companies have and individuals have in entering the Chinese market. It's not as scary as the media portrays it to be. You just have to be aware about what you're investing in and have the knowledge level. I always say knowledge is power and offers you leverage in China, which is really the truth. So, I hope that this webinar session today will truly inspire you and inform you and educate you on how to do e-commerce in China. So we're going to start off today looking at how to ship product to China using one of the cross-border e-commerce methods. Now, this presentation today is specifically geared, if you joined the first webinar session on Monday, I was highlighting basically two overall structures that people can use going into the market. One, by not having an entity there, and the others by having actual entities there and choosing then one form of entity. Today, I'm looking at the former, which is basically saying if you're not ready to invest in the Chinese market, but you want to see how the market is going to develop, I'm going to be showing you two cross-border e-commerce models. We're going to be looking at the shipping flow and the tax flow, because I know that this is a starting point for most people who are looking to go into the market. So this is our agenda. It's not as long as my day one session was, but there is a lot of information garnered into each of these points. So let's start off, because I got a question yesterday actually, which was, what is cross-border e-commerce in China? So I want to first start off by explaining what that is and defining it. The current cross-border e-commerce regime in China, it initially was launched in 2014, so it's very young. And it basically permits overseas sellers or retailers to sell consumer goods directly to Chinese consumers through certain registered e-commerce platforms like Tmall, JD. The qualifying products can be imported into China on an expedited basis at reduced import tax rates, as compared to the goods imported through the ordinary import channels, for example, in bulk. Aside from the benefits that have already been made available and obviously will continue to apply, as of January 1st, 2019, there are certain new benefits that are strengthening the incentives for overseas retailers to use these cross-border e-commerce channels. It's important to note that a core part of cross-border e-commerce is the fact that the platforms are all connected with the Chinese customs. So whatever e-commerce platform you're using, Tmall, JD, whatever you're using, it's all connected to the various customs bureaus. And the reason for this is the obvious. It's needed for the orders to be registered and tracked digitally. Before the package can even be sent, the Chinese customs needs information about the shipment, the payment, the order. And the biggest question that people asked, and there was certainly a question yesterday about that, was, do the products have to go through the China Inspection Quarantine Bureau? And Miria did highlight on that. Basically, it depends on what e-commerce method you're going to be using. If you are going to be using the direct shipping model, it does not. If you're going to be using the bonded warehouse model, then yes, it does. So why have these January 1st, 2019 regulations come about? The main critical reason, and I did highlight this on day one, but just for your benefit, for those of you that didn't join, the main reason behind it is the fact that the cross-border e-commerce market in China, it's not mature. It's still brand new and fresh. And as a consequence to that, there are a lot of gray sales channels, like, for example, Daigou, that I went into much greater detail on day one about. But Daigou is basically buying products that have been smuggled into China, all right? So the Chinese government has created these new regulations to try and halt this type of smuggling of products into China. And from my perspective, it's just making this market so much more mature so that at some point it can overtake the #1 market, which is the US currently, in terms of e-commerce. So I think the first question that most people are probably asking themselves is, can my product be shipped at all to China, right? It's the basic start-off question. So there is a positive list. So the question is, what is this positive list? And Miria did go into detail yesterday in her legal session about e-commerce, but just very briefly and in layman's terms. The positive list was first released on April 7th, 2016 by 11 different Chinese government departments. And this list had 1,142 commodity categories included. A supplementary positive list was promulgated on April 15th, 2016, adding another 151 commodity categories. And the latest and most updated positive list is from 2018, which encompasses approximately 1,321 categories. What I just want to emphasize, and this is categories, it's not under each category is then a further product item list, right? So there are 1,321 categories of products that can be imported through the cross-border e-commerce method. Now, the current benefits, if your product is in this positive list, is the fact that your product will enjoy a preferential tax rate as long as the transactional value does not exceed 5,000 RMB per transaction or 26,000 RMB per year per consumer. All right. So there are preferential tax rates that are then imposed on these positive list category products. Plus, you can import these listed products into China via either the bonded zone model or direct shipping without applying for any form of import license or other import certificates. So when entering into the bonded zone, basically what happens is that the customs clearance form is online, can be checked, and it will be exempted when leaving the bonded zone. So one of the questions I did receive yesterday, which is why I then added in this slide, was in relation to a special registration for cosmetic products and baby formulas. So the positive list required special registration, special licenses, and filings for cosmetics, baby formulas, medical equipment, etc. But this requirement has been postponed several times, and as of 2019 has now been indefinitely postponed, meaning ultimately no special licenses or filings have to be made for these types of products. So that's a big yay. So your question might then be, well, if I find out that my product is not on the positive list, does that mean I can't ship it at all? Don't worry, you can still ship your product directly into China through the direct shipping model. However, you will expect obviously to not have any of those benefits. So you will have higher tax rates imposed on the product. There'll be more time spent on customs clearance and obviously other procedures, just making it more of a delay for your consumer to actually attain the product. Now, I thought it was really interesting just to look at the cross-border e-commerce shoppers to show you what are the main categories of products that are being sold. So food, beauty and personal care, and apparel, footwear, bags are really the three largest categories that are being shipped over. And then obviously you can see all the others as well. So if your product is in one of these categories, then you already now know you will have no issues in terms of getting them in and selling them through these models. So let's look at the types of shipping models. Now, I thought, not that I'm lazy, but I basically took this diagram from Li and Feng's business intelligence department because I thought they created it so perfectly, and I truly didn't want to replicate it myself. And they show here, under the direct shipping model, two types of solutions that are currently being offered. Now, Miria went into great detail yesterday about the direct mail model, mailing model. But what I wanted to talk a little bit about today, which maybe some of you are not aware about, is the direct shipping model plus the overseas warehouse model. So some leading cross-border e-commerce platforms such as JD.com, VIP.com, NetEase, Koala, Xiaohongshu are ramping up efforts to build overseas warehouses to facilitate this cross-order shipping. So in May 2018, VIP.com announced that its international arm, which is VIP International, would cooperate and collaborate with JD Worldwide in having overseas warehouses. So VIP.com provides overseas warehousing and logistics services to JD Worldwide, which includes 12 overseas warehouses, 8 of which are self-operated by VIP.com. I'm not privy to the exact locations of these warehouses, but you've got to imagine that they're in the main jurisdictions and main economies throughout the world. So I can definitely imagine it being China, Japan, the US, probably Germany, UK, and several other jurisdictions. So what this basically means for VIP.com is that it can better utilize its overseas warehouses as well as its shipping services and reduce costs and improve logistics efficiency. So indeed, setting up these overseas warehouses is regarded as quite a large and substantial investment by these operators, and it obviously gives them deeper information in those local markets, how to adapt practices and how to learn on doing the whole e-commerce and shipping more effectively. But what does it mean for the overseas retailers? So basically what it means is that customers place orders obviously on these cross-border platforms. So on VIP.com, on JDWorldwide.com, the overseas retailers will ship the products to the overseas warehouse instead of sending them directly to the warehouse in China. The operators, so VIP.com, JD Worldwide, will collect and store the parcels in the overseas warehouse before shipping them out. For customers, a major advantage of using these overseas warehouses is that logistics costs will be cheaper than the direct shipping model. Obviously, as more recipients can then share the logistics costs. The only downside right now is the fact that shipping time is slightly longer because you're adding an additional step into the flow when reaching the customers. But what does this basically mean in terms of advantages? Well, the first thing, obviously, when you do the direct shipping model is you ship your products directly from overseas. When you are shipping them directly and the goods arrive in China, it does not necessarily mean that they're going to be checked or taxed. This will happen on random inspections, on random checks where the Customs Bureau will take a package, open it, and inspect it. If that occurs, then the VAT will be passed on to the end customer at the local post office before the package is collected. But if there is no random check or no spot check, basically it just sails through customs ends up at the customer. So the benefits ultimately are packages are randomly checked, very randomly. Taxes are only applied occasionally. There's no stock that's kept in China. Tax exemption is there if the value is less than 50 renminbi. And there is no inspection and quarantine clearance needed. It just basically sails through. So the obvious disadvantage, as you can probably imagine, is that it does take between 70 and 30 days for a package to be delivered, right? Now, some Chinese buyers are extremely happy with direct shipping, primarily because A, they want the product, B, they know they're not going to get a fake product, and they're willing to deal with the longer delivery terms. However, as an overseas retailer or supplier, this is not a long-term solution for you, but it is a fantastic way for you to test the market. All right, so you have to think very clearly on how you're going to create this type of business model, because most of these platforms, if you're using the overseas operator platforms, you don't need to have an entity locally. However, if you want to use the overseas platforms local entities, then you will need to use an intermediary to help you set up all those types of different WeChat accounts, websites locally, and dealing with all of those criteria. So this is a perfect suggestion for those of you that are not ready to commit to the market, don't want to set up an entity yet, are satisfied using the platforms by the operators, using the overseas platforms by the operators. Perfect way to start this. Least commitment, but it gives you an idea and helps you test the market. But again, not a long-term solution. Now, in the direct shipping model, if your product gets inspected and gets caught, there will be tax rates that apply. And as of January 1st, 2019, these are the tax rates for the various products. So you have a tax rate of 15% on the products that are listed there. You have a tax rate of 25% on the products that are listed there, and a rate of 50% on the products that are listed there. This is the only tax that will apply. All right, so please do keep that in mind. Now, conclusion of the direct shipping model. It is not a scalable option. It is a great option for conducting small tests or promotions to understand whether your products are going to be sold. So definitely a fantastic starting point for you to consider and think about. And don't forget, you can continue to use this method even if you use an intermediary in the market to help you with branding, PR, all of the marketing related functions that have to occur in order for consumers to know about your product. The second one, again, thankfully, Li and Feng's Business Intelligence Department made another wonderful diagram that I'm cheating a little bit by using, but I think it describes so clearly the flow that occurs and the steps that occur. So Miria yesterday looked at the bonded area import model, but what I wanted to do was also look at a new thing that is popping up in the market, which is the bonded area import model plus the offline store model. So let me look at that a little bit with you. So the basic requirement here for the bonded area import model is the fact that the warehouse needs to be located in a free trade zone. Now, the issue here, as Miriam mentioned earlier, is you either set up your own company, which acts as the warehousing facility, meaning it will be the importer of record on the goods that come in, or you use a distributor who will be the importer of record, or you use an import-export agent that will be the importer of record, or you use your logistics company that you're anyway going to be using to ship products to act as the importer of record Not all freight forwarding companies offer this service, but many do in China, and then they offer the warehousing solution as well. But basically what this means is you are able to store and clear goods without the necessity of registering or filing with Chinese authorities. Products can move freely within the free trade zone and can be transported back overseas without the necessity to pay any taxes. Duties are only paid once the goods clear customs, meaning they have been sold online. Okay? The tax rates are something we're going to be looking at in greater detail. I have a slide specifically for that, but basically there is a discount tax that can be offered for products that are shipped in this manner. Even if the bonded model reduces shipping lead time significantly, basically if you ship products that are very popular in bulk, they are stored locally, then you're only going to have a lead time of 2 to 4 days to the consumer, right? This is compared to the direct shipping model where you have between 70 and 30 days. So it's obviously much more suitable. It's an option where if you're ready to scale up, it's beautiful, all right? And you are not forced in any shape or form to set up your own company. Like I said, in this scenario, you do have to use an intermediary, though, to act as the importer of record for those bulk goods. Now, more recently, some cross-border e-commerce platforms, after having gained approval from the authorities, have opened up a new form of offline store where customers can purchase and pick up the bonded imported products directly in these stores. The bonded imported products go through customs clearance only after the customer has so-called placed the order, i.e. in the physical store has picked out the product. So in February 2018, koala.com opened its first offline store in Hangzhou and opened its second store in Zhengzhou in August 2018. And basically how it works is that the customers can purchase bonded imported products directly in the store. After choosing the product they want to purchase, customers go straight to the cashier, provide their ID card number, telephone number, settle the payment, and then the customs clearance process will be processed immediately. The process on average takes 4 minutes. The customer will receive an SMS notification saying that the customs clearance has been successful. And after showing that SMS to the cashier, they can go then pick up the goods and exit or ask for it to be delivered to their home. So the offline store is now really a de facto extension or new model that's being created. So instead of everything just being online, they're creating these offline stores as well as a new method and mold of selling products and selling goods. And I think it's really important that people are aware of this option as well. So what are the advantages of the bonded warehouse model? Well, the basic requirement, first of all, is that you have to be in a free trade zone. There is not just the Shanghai free trade zone. So for those of you that are not aware, there are a number of free trade zones located throughout China. So it does not mean that your goods have to be shipped to Shanghai. They can be shipped to Shenzhen, Beijing, Guangzhou. There are numerous free trade zones out there, even some that are not at the ports, but are more inland. The clear advantage is that you are able to store and clear the goods without the necessity of registering or filing with the Chinese authorities. So basically, the ship arrives, the goods go directly into the warehouse. Nobody has inspected them or checked them. Duties are only paid before customs clearance. Products can be moved freely within the free trade zone and sent back. So if you find out or your local partner finds out that some of the products have broken along the way, or they're being warehoused for so long that the expiration date is there, they can be shipped back duty free. And obviously the tax rates are comparably low compared to the traditional import trade method. So you can enjoy basically a 30% discount on traditional import rates, which I think is significant. In addition, it reduces lead time down to about 2 to 4 days. The bonded model requires inspection and quarantine clearance only at the point of it being actually sold. So it has to go through a quick process. I think one of the beauties of the free trade zones now is that this process doesn't take a lot of time. It's actually very quick to do. And one point I will mention later is that you don't have to register these products ahead of time to go through these inspection and quarantine clearances, whereas through the traditional import-export method you do. And again, I've highlighted here, using the direct shipping model at a start is really a preferred choice to understand and get a grip of sales volumes before then moving on to the bonded warehouse model, where you can ship over in bulk, have goods readily available for sale in the market, and then speed up the shipping time to the consumer. In reference to the tax rates that are imposed on the products that are using the bonded warehouse model. So basically, I've used here an example that the VAT rate that is going to be applied is 13%. The VAT rate is different for different types of products, so please be aware of that. But I've used this as an example on the formula, so you can then calculate it once you know what rates are applicable to you. So the tax rate is normally set to about 9.1%. On average, the products are around 13% VAT. Occasionally, there will be an extra consumption tax that is applicable of between 10 to 20%. And this is more on luxury end products and cosmetics. The cross-border trade and Forex is always an issue. It's an issue already in the traditional import-export methods. But one thing, two payment providers I want to highlight here for those people, again, that are not committed to the market just yet, is that you can use Alipay cross-border and WeChat payment cross-border. And the ability there is that the Chinese user still pays in renminbi. Alibaba or Tencent will handle the currency conversions with their partner banks. Payment will be sent to your overseas accounts, and it's as easy as that. So it's really, really straightforward. Yesterday, Miria went into quite a bit of detail about customs and how the custom function works. I don't want to go into that much detail. I just want to give you the facts in terms of what it takes to clear your product. All right. So one of the first things that I want to highlight here is that you need an importer. When you use the bonded logistics, the bonded shipping model, the bonded warehouse, you need an importer of record that is going to receive your goods. Okay. They will have to go through a customs registration, commodity inspection, declaration. Thousands of documents are usually submitted. Taxes have to be paid. Goods are released. And then there's the foreign currency exchange control. That's basically how it works from the point the product enters China. This is the step-by-step procedure from all the clearance that has to occur to payment of taxes, to the release of the goods to the consumer, and then the foreign exchange control occurs via Alipay or WeChat cross-border pay. Now, in order for the customs to be cleared and for the goods to be released, the consumer does have to usually provide their legal name and their Chinese ID number, and sometimes also their mobile number. Okay, so you've got to keep that in mind in terms of what the consumer has to provide in order to receive the goods. Now, a very simple tip here. Again, for those of you that are not ready yet to commit to the market, use your third-party logistics provider. Usually, they will handle the entire customs clearance process. They will help to pay the taxes. They will do everything for you. Obviously, they can't help with the foreign currency exchange and payment, but they can do, when you look on the previous page, they can basically do everything from point 1 to 8. So release the product as well. Okay, so a lot of people forget well, first of all, that they need a logistics provider, right? You need somebody who's going to ship your product from your overseas jurisdiction. And this provider, if they are already located in China, can do predominantly 80 to 90% of all the functions necessary for these cross-border e-commerce issues. So let me, on that point, let's think a little bit about what do you need to start off your China journey with cross-border e-commerce. First of all, you've got to inspect your product. Does your product fit into the products list? Meaning you can then attain all the benefits. If the answer is yes, your question is, I want to test the market. Well, first, probably you want to market the product, right? You want people to be aware that your product exists. So you might need a PR agency or a marketing agency to promote your product. Spread the good news about your product, spread the benefits of your product, all obviously in the Chinese language and displayed in a way that is attractive to the Chinese consumer. So you might need a marketing agency to begin with to help you with that. The next step thereafter will be thinking about all the social media channels that you might want to have control over in order to be able to market your product. You might then want to think about the types of e-commerce platforms you want to work with in order to then sell your product, like post your product and sell your product. You might want to have a Chinese website so that if people hear about your product, they can go to your website to see, what is this all about? What is this company about? I want to know more about this product. So there are definitely a lot of first things you've got to do in terms of marketing and PR, whereby in those scenarios, you again have lots of options, whether you have to have an entity or you don't have to have an entity, and whether you need an intermediary. For those types of things, again, refer back to day 1 of this webinar series and you'll get answers. The next step then is, right, I've got marketing channels, I've got the e-commerce platforms chosen. Oh, okay, now here comes my first order. So now you've got to ship it. You've got to choose a logistics provider. So this is definitely the first place where you need to start interviewing logistics providers locally in China to understand what are their capabilities. Do they know what e-commerce is? Do they have an e-commerce division, etc.? Okay. And then obviously you start shipping. So it's important to know all of these flows and directions to understand how to create your e-commerce business strategy and business plan, and then obviously budget appropriately for it. Now, I just want to highlight a little bit about the January 1st China cross-border e-commerce regulations. And I've added a couple of points here based on questions that popped up during the webinar series this week. So the first point is looking at the pre-importation registration waiver. So basically the regulations indefinitely extend the waiver of pre-importation registration required on specified categories of products. For example, cosmetics, powder milk, formula, health food, medical devices, etc., which was originally set to expire on the 31st of December 2018. So as pre-importation registration is an important part of the current regime to impose national standards on sensitive products, this waiver continues to allow products which may not be available in the ordinary commercial channels due to market entry barriers be imported through cross-border e-commerce. So I think that's an extremely critical point for those of you that have been currently looking at traditional sales methods where your product needs to go through pre-importation registration, in terms of labeling, in terms of quarantine inspections, in terms of licenses, in terms of import licenses. Here, basically, if you're going to start off with cross-border e-commerce, you don't have to go through any of that. It's a huge advantage for you if you are in the cosmetics, milk formula, health food, or medical device industry and sectors. As I've highlighted before, there are value limit relaxations. So now basically, it used to be from 2,000 renminbi to 5,000 renminbi for each shipment, and the annual quota has also now been increased from 20,000 to 26,000 per year. So this is obviously based on the quota and values for the consumer, purchaser. Okay, it's a huge advantage now for consumers, meaning that they can spend more money per shipment and on an annual basis on obtaining foreign products. Tariff exemption and tax deduction. The current tax policy under which customs duties are exempted and import duty, VAT and consumption taxes, it's collected at basically a 30% discount compared to traditional import methods for products, for foreign products. So again, from a tax perspective and customs duty perspective, you're saving a lot of money if you choose the cross-border e-commerce model versus traditional import models. They've expanded the positive list. So as of January 1st, I forgot to mention this earlier, as of January 1st, they've added an additional new 63 categories into the list. So fantastic. Free trade zone distribution centers. They have increased, obviously, the quantity of free trade zones to be able to promote e-commerce, cross-border e-commerce throughout China. So this has been a huge effort. Now, this question was asked on day one, and I answered the person directly, but I do want to bring it up because if there are any US companies that are online or that are going to be listening in to this webinar session later on, I just want to emphasize an advantage that you will have through the cross-border e-commerce channels, which is the fact that in the current climate of trade tension between China and the US, the cross-border e-commerce program has thus far provided and could continue to be a safe harbor, as imports through this channel are not subject to any of the retaliatory tariffs by the Chinese government on US originated products. So although in the traditional method it is, via cross-border e-commerce, it's not. Okay? So what is the strategy for overseas retailers? So let's sum up a little bit. Obviously, against the backdrop of the current trade climate, you know, particularly with the US, the cross-border e-commerce program provides a really great and unique opportunity for companies to avoid, obviously, these retaliatory tariffs and the technical barriers around trade. And what I mean by that is, for example, if you're in the cosmetics and medical device sector, where you can get your goods in without having to go through these pre-registration steps. You also have, obviously, benefits such as tax reductions, much faster import clearance processes, and other forms of incentives. But obviously, the January 1st, the new regulations that came out January 1st, also impose higher compliance burdens on all participants. So, you know, we've been focusing lately that most of the burden falls on the operators in terms of making sure that there's no fake goods on their platforms, making sure that IP is not stolen. But ultimately, this also all falls over the overseas sellers, making sure that if they are using intermediaries, that these intermediaries are valid, true companies that are not doing anything on the black market to sell their goods. So let's sum up a little bit on what I would recommend you to do as a strategy as an overseas retailer. The first is obviously designing a supply chain structure. So as I mentioned, look at all the players you need, from marketing, PR agencies. I don't know, maybe you do need a distributor because you're not just looking at e-commerce, but you're looking at other forms of offline methods or traditional methods to get your product in. Look at logistics providers, look at the e-commerce platforms and operators, look at the social media platforms. Who do you want to work with, right? You've got to investigate your entire supply chain and obviously the operation model to ensure compliance, tax efficiency, and one thing I didn't highlight here, but ease of doing business. You want to keep things as simple as possible for you, particularly in a stage where you're not sure of the market, where you're testing it out, right? You don't want to have a complex model. You want to do due diligence. So on all of these intermediaries that you're going to be working with, make sure you do due diligence on them. Talk to people, get reviews, understand what these people are about. You can even get background checks done on them, just to make sure you're working with reliable third parties. Then you want to make sure you have the contract terms bulletproof with these third parties. You must protect your interest. You don't want to start off your China journey and then, as Miria was highlighting through her presentation yesterday, get into trouble along the way where ultimately you're exiting the market. You don't want that to happen to you. So when you are negotiating with these intermediaries, make sure that you really go into detail, have an eye on detail on the contract terms, have a lawyer in China review them, right? Miria is there for you. There are thousands of other lawyers also on the market that can aid you in this step. And last but not least, do not forget about your investment. Do not forget about what you're trying to create for the Chinese market. So ultimately, create an internal compliance program. Monitor your supply chain. Monitor your operating model, particularly if your product is successful in the market and you have to then at some point scale up, which means you may potentially want to actually establish an entity in China to take control over the whole supply chain and over the whole operating model. Create this program so that you are fully aware of what is happening in your market. So, ladies and gentlemen, there have actually been no questions that have come in at all. So either I was very clear or I've overwhelmed everyone to not know what to ask. But I guess I will leave the presentation there. As mentioned, if you are currently typing in questions, I'm more than happy to answer you directly. I sincerely hope that these 5 days of this webinar series gave you an overall view of creating effective sales strategies for your e-commerce model. And I hope for those of you that are very new to the market and are really at the early stages of developing a strategy, have been able to garner some tips in terms of what not to do, what to be aware of, what models exist, and how you can go about this. As mentioned, if you do have any questions or comments, please don't hesitate to reach out to me. That's why I'm there. I'm there to help you. Please also know, I mean, again, there are thousands of corporate service providers in the market. There are thousands of consultants. There are thousands of lawyers. We are all there to give you the advisory you need to make your journey as smooth as possible. So again, if you enjoyed this webinar series and you would like more information, subscribe free of charge to our online e-newsletter. We send out e-newsletters on a weekly basis every Monday with all new articles, new events that are going to be popping up along the way. You can also follow me or follow our company on social media where we're posting pretty much on a daily basis as well. Just to highlight a couple of the upcoming webinar series, I have a German webinar series that will be coming up from June 24th to 26th. So if you are German and you're in the German-speaking community, you may want to sign up for that. Otherwise, in July, I've got a webinar series on how to lead a team in China. In September, August, I'm hopefully taking a bit of time off. In September, I'll be coming back with a big bang on looking at what you need to know from an accounting and tax perspective in China. And in October, I'll be looking at the market entry into China, really at the basics of what you need to know from a pre-investment stage. So again, I truly hope that this was very useful to you. I want to thank you all for joining me, especially all those that joined for all 5 days. Greatly appreciate it. And I look forward to seeing you again either in June or July for our next webinar series. Thank you very much and goodbye.